Welcome. Today, we're diving into the practical impact of automation in financial processes, specifically the changes made in Microsoft Dynamics 365 Finance version 10.0.44. There's a lot happening where inventory and fixed assets meet, so stick around for an overview of how these modules now connect more seamlessly.
It's amazing to see finance technology evolving, especially when it touches something as crucial as asset management. We're unpacking updates straight from Microsoft's documentation, and we'll look at exactly what's changed, why it's important for accounting teams, and how everything fits together.
Right. The core of today's discussion is how the inventory closing recalculation now links even tighter with the fixed assets subledger. The new version automates cost adjustments, so finance teams worry less about manual updates and more about real business results. Dynamics 365 Finance, especially in this release, is really focused on bridging gaps between inventory and asset accounting. It's all about financial accuracy and reliability, which is huge when companies acquire assets through inventory items.
That makes sense. When assets move from inventory into the fixed asset ledger, any cost variance could really trip up audit trails or end of period reports. Getting that right automatically is a big win.
Exactly. So let's start from the top, inventory closing recalculation itself. The process is about finalizing inventory values at the end of a financial period. There's a recalculation of item costs to reflect the most accurate prices possible, and that's what feeds into the financial statements. With version 10.0.44, this recalculation doesn't just update inventory records, it also directly posts acquisition adjustments into the fixed assets module. Anytime an asset is acquired via inventory, like through a purchase order, the system now generates an acquisition adjustment transaction automatically and posts it to the designated account set in the fixed assets posting profile.
So this means fewer manual journal entries for those adjustments, right?
Yep. The automation removes the need to double-check cost matching or create manual adjustment entries. For finance managers, that means the subledger stays in sync and there's much less risk of discrepancies building up over time.
That's actually a relief. Would you say this helps teams track asset costs more reliably now?
For sure. Because inventory close recalculates costs to their final amounts, those exact figures now show up in the fixed asset records. So if an asset was purchased at a varying cost, maybe the invoice was adjusted after the asset was capitalized. The system makes an automatic acquisition adjustment in the fixed asset subledger.
Ah, I see. Does that also apply when someone uses an inventory to fixed assets journal and the costs end up different than expected?
Yes, when the inventory to fixed assets journal posts a different value for the same item being capitalized, the recalculation applies, and an automatic adjustment is posted to fixed assets. The connection between inventory transactions and asset accounting is much tighter now.
So if the acquisition cost in a purchase order invoice doesn't match what's been initially recorded in fixed assets, the system picks up the variance and posts a correction without anyone having to intervene.
Exactly. The process is continuous. Any cost changes after the first entry, like adjustments to invoices or journals, flow into the subledger as an acquisition adjustment transaction. That keeps asset values up to date and accurate for financial reporting.
That makes me wonder, how does the system handle different types of cost adjustments? Like, does it only post differences from purchase orders, or does it catch all kinds of cost variances for assets acquired through inventory?
It actually captures both purchase order cost adjustments and those from inventory to fixed assets journals. So, whenever there's any recorded variance in acquisition cost, whether from invoicing changes or a journal entry, the inventory closing recalculation will detect the difference and post it as an acquisition adjustment to the subledger.
Interesting. Does the posting profile in fixed assets control where these adjustments end up?
Yes, the posting profile really matters. It ensures adjustments go to the correct acquisition adjustment account, keeping the financial statements clean. Teams can configure profiles to match the organization's reporting needs, so the process is both automated and customizable.
That's neat. If you think about it, these kinds of processes really take a load off from manual reconciliations. Audience, have you ever dealt with mismatched asset costs during a closeout? What would automated corrections mean for your team?
We've covered some critical updates today. The new features in Dynamics 365 Finance and fixed assets tie together, making sure costs are always up to date in both modules.
Financial accuracy gets a boost thanks to automatic acquisition adjustment transactions. less manual effort, more reliable asset and inventory reporting.
The ability to capture and post cost variances in real time means finance teams can trust their subledger numbers and move quickly at period end.
It's a solid leap in integration. As these systems keep evolving, it'll be interesting to see what other business processes get automated next.
Thanks for joining us for this overview. Stay curious about how these tech updates can impact your financial workflow.